Welcome back to Investing and Trading Live, sponsored by Online Trading Academy. My name is Josh Lilquist, and I do have my good friend with me here today, Mr. Al Connickson, dropping some knowledge, dropping some bombs on how the markets function, how they work, and we were just talking about different income strategies and how to have opportunities to do that during your working years and during retirement. So if you did miss tickets to that free investing class that we have local here, you can text the word investing to the number 210-210. That's text investing to the number 210-210 for 2 seats for this class. Also a financial quick start kit. And this kit will help you get started right away. So Al, we were talking about different income strategies in that last segment. Mm-hmm. And I was kind of, as you were talking, I was reading an article that I saw, and this was on from the Wall Street Journal. And it was just mentioned here that mortgage rates hit the highest in 20 years, 7.08%. Now, basically what that means is if a buyer who puts down 20% on a medium-priced home would have a monthly payment of around $2,259, according to the listings website, Realtor.com. That's up 75% from 1 year ago, where that payment was just around $1,200. Think about that for a second. Up 75% for somebody that wants to purchase a home just because of interest rates. Now, to go a little further, it says here that in September, existing home sales fell 24% from a year ago. New home sales were down 18%. And home prices are starting to slip month over month. So what's happening right now in the housing market is sellers are stuck on a price because they feel it's worth that much. Buyers are stuck on a budget, right? So that is why it's so important to have multiple streams of income, like you were talking about in that last segment. But let's just say somebody is in their 50s or maybe even 60s and they want to be able to move. They need to have a certain amount of wealth built up now because prices are more expensive. So they're going to be stuck in that big home that they can no longer need, right, because of their empty nesters now. And they want to downgrade or downsize. But the pricing just doesn't make sense because interest rates are so high. So why am I telling everybody this? Well, that's why it's so important to have wealth built up for the times that are happening right now. But if you have markets that are going down, you're losing capital in those retirement accounts, you're going to just be stuck and you're not going to be able to do anything. So let's talk about more of a wealth strategy here, Al, because what are some of the things that people have the opportunity to do so this doesn't happen to them? So they're not stuck in these homes and, they can't get out of those big homes or whatever that may be. How do you protect retirement accounts? That way you're comfortable when things like this happen.
Right. Well, one of the things to remember is that a big part of people's wealth is the value of their homes.
Yeah.
And the real estate market is something that we always have to pay attention to because it does have such an impact on that. If housing prices are going down, a lot of people that are getting close to retire or are in retirement and are looking at the value of their home when they sell it to take them through retirement may be taking a hit on that. Not only maybe the value of their home may be going down, but also with the inflation, the cost of living is going up. How do you protect yourself? Well, in a portfolio, there are protection strategies that are available that obviously people aren't taught. I can't tell you how many people we have come in just recently, Josh, and have said, I did fine, in 2018 to 2020, I did fine. 2022, all of a sudden, all I see is red. All I see is the portfolio statements I look at looking worse and worse every time I look at them. Well, why? It's because you weren't protected. And it's because apparently either the brokers aren't using the right kind of strategies to protect you, or they really fall into this, it's time in the market. And we've talked about that before. It's the 60-40 split with the idea that you just hold on to it and don't worry about drawdowns. Well, how is that working for you this year? How do you feel? How comfortable do you feel following that advice?
Which now I got to find the article. I'll look here in a little bit, but they're actually changing that thought process now.
Well, that's what I was going to say.
Okay.
And here's what they're doing.
You're 2 steps ahead of me. That's why I love doing the show with you, Al. You're just 2 steps ahead of me. I have a great thought, and then you just steal my thunder.
Well, and what if you lose your voice? I have to make sure that I represent you in some way.
Well, let's hear what you're going to talk about.
Well, the bottom line is the 60-40 strategy is not working. The stock market, the 60%, which is stock, the markets are all down. They've been down in bear market territory. What about bonds? The 40% bonds, that was supposed to kind of hedge the downside of the stock market. Well, it had the worst bond market that we've had since where I had it here somewhere, 1842. 1842. Right. So that's a big hit. And now the strategists are admitting that 60-40 doesn't work. So what they're doing is they're looking at coming out with a new type of portfolio. It's a macro resilient portfolio based on things that the public may not have access to or is so complicated that the public is going to throw their hands up and say, I can't do this on myself. I have to use a financial advisor.
So
that's part of the strategy.
Yeah. What can they do differently?
What they can do is this. Here, just remember this. This is the most important thing to take away from the show. No matter what these strategists create, the bottom line has been, and always will be, if there are more buyers, price will go up. If there are more sellers, price will go down. It's finding where that is going to happen on a price chart. That's what's important. We don't need to follow all of what may be coming down the road, maybe some formulas and some access to certain computerized material or data to come up with this macro resilient portfolio. Let's keep it simple. Keep it simple and follow what has always worked and always will work. It's just a fact. That supply and demand relationship, the buyer and seller relationship, is something that really can't be argued, and that's what moves price.
I am so glad you brought that up, Al. I'm glad you are 2 steps ahead of me, because that is an important thing that you just said right there. So you were talking about that 60-40 portfolio that, money managers have been putting people in for years and years and years. So here's what's happened. Just kind of, if you were listening right there, you probably already know what I'm about to say, but I'm gonna tell you what Al just told you. They're now changing that strategy after prices dropped. Mm-hmm. Think about that for a second. After your accounts have dropped. So they're trying to say, hey, we're going to be in this new strategy. It's going to be all, the holy grail. It's going to be the best strategy ever. Well, your money is already gone, right? And people are thinking, well, I didn't sell. It's not gone. It is gone out of your accounts. If you have red in your accounts or negative returns, that money has disappeared and has gone to the people that have shorted the market and are profiting as this market's going down. So they are changing this strategy after it happens, trying to make you feel good about it. Now, do you feel good about your money being have been disappearing for the past year over 20, 30, 40%, depending on what type of funds that you're in? Are you happy about that? Probably not. But are you happy that they're now changing that strategy? And it's a micro resilient strategy. What the heck does that mean? That is why it is so important, imperative to learn how the markets actually work, to be proactive rather than what they're doing is being reactive. Wouldn't you like to be proactive? What if this market continues to drop, which, I personally think there's a possibility. Well, why not have the techniques and strategies to protect your accounts now? Protect those accounts from those drops. That way, you when things happen like inflation, like it's happening, and you want to be able to do different things, you have that opportunity. But you won't have that opportunity if you continue to do the same things over and over and over again. Look at the people, talk to anybody that experienced 2000 or 2008, and they lost 40, 50, 60% of their accounts. And you talk to them now, they say, I wish I would have done something different. But here's what they said back then, and here's what people are saying right now. They're saying, well, it's happening to everybody. Mm-hmm. Why be a sheep? Why be in that same group when you don't have to be? There are opportunities to do things differently. And you're being put in a strategy that is done for the masses. That's what we do in Online Trading Academy, is we do things and we train and teach like the institutions are doing, not what they're saying. We have a 3-day deep dive. I want to give away some seats to. Actually, there is a tuition to this. It's $99. It's a 3-day deep dive class, especially about retirement accounts. If you have concerns about those retirement accounts, want to be able to protect those, grow those in down markets, we have this class. It's 3 days with one of our professional instructors. We have about 60 of them. We fly them from all across the world to teach our classes here local at our academies. You can call right now for 2 seats. It's $99. Bring your spouse with. That's why we talk about that. It's important that finances are made and built for legacies. and having those opportunities. Call 888-682-6466 for 2 seats for this class. It's $99. When you call in, mention Josh says you want the 3-day deep dive class for $99. Call 888-682-6466 for 2 seats. Al, coming up next, I want to continue talking about some more retirement strategies, also income strategies during those retirement years. So that way you're not just drawing down those accounts. So if you feel like you're short for retirement, if you feel like you don't have enough, what are those strategies to boost that now, but also continue that so you have more, we'll say more buckets to pull from? Call 888-682-6466 for 2 seats for this 3-day deep dive class. Mention Josh says you want the class for $99. This is Josh and Al, Investing and Trading Live. We will be right back.